Welcome to the Tokenized Economy. Here is today's explainer on the broker-dealer model for tokenized equities. Okay, so let me ask you something. What if you could invest in pretty much any company in the world, but without ever actually owning a single share? Yeah, it sounds a little weird, I know, but that's the core idea we're going to break down today. So, in our last explainer, we looked at how tokenization can fit inside the existing financial system, right? But that opens up a way more interesting question, doesn't it? What happens when we step outside of all those old school rules and structures? What if we could just build something new? That's exactly what we're talking about today, a model that completely changes the game when it comes to how you, the investor, connect with an asset. All right, so how does this whole thing actually work? Well, it's pretty clever. Just imagine this. A broker-dealer goes out and buys the real shares, the traditional stocks. They hold on to them. But then they create a digital token. Think of it like a digital wrapper that perfectly matches the economic value of those shares. So when you buy or sell that token, you're not actually trading the stock itself. Nope, you're trading this digital wrapper that gives you all the financial benefits. That's why people often call them wrapped equities. Okay, let's just walk through this process together step by step. First up, a broker buys the real equities and puts them with a custodian. That part's pretty standard stuff. Now, step 2 is super important. Those shares are segregated. That means they're set aside specifically to back the tokens, one for one. It's a crucial link. Then, in step 3, the broker issues the digital tokens, each one representing the economic value of a share. And finally, step 4, that's where you get involved. Investors can now buy, hold, and trade these tokens, and they'll track the price and dividends of the real asset perfectly. And this brings us to what is probably the single biggest idea you need to wrap your head around with this model. It's a total game changer because it splits apart legal ownership from economic exposure. It's kind of like getting to enjoy all the profits from a bakery's amazing cake without having to actually own the building. And this slide really lays it out perfectly. Take a look. On the left, you've got legal ownership. This is the actual share, the voting rights, the whole shebang. It stays with the broker's custodian. But then on the right, you see economic exposure. That's what you get as an investor holding the token. So what does that mean for you? Well, it means you get the benefit of the price going up, you get the dividends, basically all the financial upside, but without all the formal stuff that comes with being a legal shareholder. It's a really interesting trade-off when you think about it. Okay, so that's the theory, right? But this isn't just some idea floating around. It's actually out there in the real world, being used by some pretty big names. So let's take a look at how this model is being put into action right now. A perfect example of this is what Robinhood is doing over in Europe. They use this exact model to let their European customers get in on popular US stocks and ETFs. I mean, think about that. Someone in Paris can get exposure to a company like Tesla or Apple without the headache of opening a US brokerage account. Now, technically, the tokens are on a network called Arbitrum, but for the user, it all just happens smoothly right inside the Robinhood app. It's a fantastic example of how this technology can just smash through old geographical barriers. Okay, but let's look at a totally different approach. Let's talk about Ondo. So if Robinhood's setup is like a really nice, clean, walled garden, then what Ondo is doing is building a bridge out into the wild west of DeFi. They also issue tokens for economic exposure, but they do it on public blockchains like Ethereum and Solana. And here's why that's a big deal. Once you have their token, you're not stuck in one app. You can take that token anywhere in the DeFi world, trade it on a decentralized exchange like Uniswap, maybe use it as collateral for a loan. It really shows you the amazing flexibility you get when you bring this model fully onto the blockchain. So we've seen a couple of really powerful but also very different ways this model is being used. And that naturally leads to the big question, what are the pros and cons here? What are the huge benefits this unlocks? And what are the new risks we really need to keep in mind? Because like any powerful new idea, there's always two sides to the coin. Let's dig in. All right, on the benefits side, this stuff is genuinely exciting. I mean, we're talking about breaking down old barriers. This model can give people global access to stocks they could never reach before. It makes fractional ownership super easy so you can buy just a small slice of an expensive stock. It could even lead to markets that are open 24/7. And really, the bigger picture here is just a massive injection of flexibility into how we distribute financial assets. It's a really big deal. Okay, but we have to talk about the other side, the new risks. And this is where you need to pay close attention. The most important thing to understand is that your trust shifts. You are now putting your trust directly onto the company that issues the token. You're trusting that they're actually holding the assets they claim to. You're trusting them to always maintain that perfect one-to-one backing. And at the end of the day, you're trusting them to give you your money back if you want to redeem your token. It's a huge shift from trusting the entire financial system to trusting one single company. So, after all that, the mechanics, the real-world examples, the pros and cons, if there's just one thing you take away from this explainer, let it be this. The whole broker-dealer model. It's all about providing tokenized access to an asset without giving you direct ownership. That's the core idea. That's the key that unlocks this entire concept. And that wraps up our look at the broker-dealer model. On our next explainer, we're going to check out the exchange-led model. That's where the trading platforms themselves jump into the tokenization game. So be sure to subscribe for more of these short explainers on blockchain, tokenization, and financial markets. And hey, I'll leave you with this question to think about. Is this the future? Trading access instead of ownership? Let me know what you think down in the comments. Thanks for tuning in.